Hello friends, good morning. It's actually quite early today, around 4:30, and I felt like recording this video. I checked my earlier videos. The last time I uploaded something that was related to the transaction cost and risk management. That was on 18th Feb. Since then, some more people have joined. This is very heartening to see because I don't usually run a typical. I'm not a YouTuber or a blogger, so my channel does not contain flashy or entertaining content, or you won't see videos with very eye-catching thumbnails or titles. Anyway, whatever I feel I am doing and I want to keep a record, I post those videos so that I can revisit them from time to time. That is my sole purpose, and in that purpose, if I am able to inform or share my views with others, then nothing like it. So without further ado, let me get started. The last time I visited, since then a lot has changed. So on 23rd, we all know that the war between Russia and Ukraine had started, and it was a very unexpected development because up to 23rd, even up to 22nd, the idea that we were getting was that probably Russia is not going to attack. Anyway, so these are things which are beyond our control, and on 23rd, the markets not surprisingly moved down, and they have broken. This green line I have plotted here is the 200-day moving average. So you must be knowing that 200-day moving average is considered as a benchmark by many traders, that as long as prices are above 200-day moving average, they do not, they think that the uptrend is intact, and once it breaks down below 200 days, so intermediate term, it is considered as a bearish signal, at least until it crosses above the 200-day moving average. But that is a standard practice. And now I am introducing here another indicator, that is the moving average convergent divergence. Now today I have not come up to talk about these indicators. So we can make probably a separate video on what is MACD. So you can find that in TradingView, moving average, convergence, divergence. I have added to my list of favorite indicators, and the strategy that you see here, that is the signals, they are based on this indicator only. I coded it for myself, so it is available as MACD cross long. So it is for long trades only. So the idea is that whenever the MACD line is crossing this signal line, orange line from and MACD is negative, the histograms are positive, then there is a green entry signal. And when the MACD is crossing below the signal line and the histogram is red, it exit. And my exit signals actually also take into consideration the relative strength index. So it's a combination of MACD, mainly MACD, and the exit also depends upon RSI. So maybe we will talk about this strategy, that is entry exit rules, some other time in future. But I have come here today with some specific messages that, see, these are very turbulent times. The VIX, that is the volatility index, has naturally shot up. In Nifty, NIFT, India VIX, so sorry. India VIX. If you see the India VIX, even a few days back it was above 30, and now it has settled around 28.5. So when the VIX gets close to 30, it is better to stay away from futures and options trading, because in options the risk premiums are going to be high. In short, options, the prices of options are going to be high. So even if you are holding an option, every day a lot of rent or theta premium will go. And in futures, you don't have to pay that, but there will be wild moves. So Nifty, NIFTY. If you just see from what levels it has fallen, let us go to, this was 23rd Feb, the day Russian and Ukrainian war started. At that time we were 1700 level. From there we have come almost 1000 points below, and we have actually gone 1200 points below in just a matter of 2 weeks or so. So therefore these are very and you see it is not also like that their body started. So let me short, it has fallen by so and 16 to 250. From there was a fantastic pullback of 7 almost 500 points. So people who would have shorted here got stopped out or made huge losses here. Again, if someone has taken a long position, getting caught up in this momentum, then these people would have been stopped out here or have made losses. So it is best to stay away from this derivative trading. Rather, it is a better time to make long-term investment, because lot of stocks that were very expensive. For example, if you go to Bajaj Finance, quality blue chip stocks that we Bajaj Finance futures. Sorry, my mouse is flickering a bit. Let me see whether I can resolve it. So you see Bajaj Finance that has corrected quite significantly from its highs of nearly 8,000 rupees to now it is 6183. So it is quite significantly below the 200-day moving average. So these are quality lenders, right? And they have made tremendous technological innovations recently. So I'm not advertising any stock, but you see, if you want to get in Bajaj Finance, probably this is something you can start looking at. And more importantly, these will not be affected much by the crude prices. Then let us look at something, one of my favorites, Asian Paints futures. So Asian Paints, you see, has fallen significantly from its high of nearly 3600 to now it is 2730. In fact, it went to 2650. So that is in fact it is a very sharp fall. Even if you compare it with previous corrections below 200-day moving average, it has gone. Last time was in August, gone was in May 20. It had corrected below the 200. So almost about 1.5 years ago, it had gone below 200-day moving average, and now it is going sharply. That is because mainly paint is a derivative of the crude. So therefore, since because of this war, the crude prices have skyrocketed, and now Brent crude is around 140, 130, $140 per barrel, and more pain is expected if now this becomes a kind of energy war, in the sense that US and other Western powers impose sanction or bans on sale of Russian crude, then Russia will retaliate it by tapping off their gas supply to the Europe. So this may become a very big energy crisis. But please remember, these are all short-term problems that will be resolved within a few months, because this will affect everyone. Right. So now Asian Paints may correct further if, for example, crude per barrel crosses or goes near to $150 per barrel. Then of course Asian Paints may see some more pain, or we don't know. I mean, that may have been already factored in this steep correction, because Asian Paints is a bluest of the blue chip stocks. So, so what I'm suggesting is that these are stocks that you will always have to buy in a premium, right? Generally, if you compare, look at the P, price to earning multiple for Asian Paints, it is close to 100. Even after this correction, it is close to 80. So these are the opportunities actually, if you are planning for your future. So 5 years down the line, some cash like FD you want to park. So these are the opportunities. So for traders this is very bad time, but for long-term investors it is very right time to get into quality stocks with very strong fundamentals, that is very clear business model with very good management. So like I have just given you two examples. Then you can also look at HDFC Banks, because these are stories that are, these are the main wealth creators in the Indian equity market. Then you see HDFC Bank. So it is such a blue chip stock. Now it has corrected so much. It is way below its 200-day moving average. In fact, it has broken below all the previous swing lows that you can see. So these are, but in terms of business, it is it is the largest, it is the largest private sector bank, and under the able leadership of Aditya Puriji, it has made significant technological innovations, and it has captured significant market shares in the private banking space. So it is one of the leading lenders, and so therefore these are some of the examples that one can consider. In fact, since the war broke out, I have not traded anything in Nifty futures and options. I have been looking at these some of the blue chips for my future. So one of the main message that I want to convey today is that as a trader, one of the most important aspects is when not to trade. Okay. A trader is not necessarily one who is always every day goes in and plays with, or takes position in the futures and options. That is something I was doing maybe a few years back when I was new to this thing, and then you will see that the less you trade, the more opportunities actually you get, quality opportunities. So I'll show one example. Maybe with this I will go. You see, so this is a trading strategy. As I said, I will share with you in detail maybe in the next video, because I want to keep my videos short. So on the daily chart, when the MACD is crossing above the signal line and below zero, so these kind of entry signals do not come very frequently. So these two have been recent signals. The last one was around that fantastic rally we had from 27th December to it let me out on 18th January. This is a fantastic rally that we had. After that, you see this has not given any signal because the market has been volatile. And here you see it had got a very beautiful rally from 8th April till okay, because I have some other rules, it has let this out. Now you see, the interesting thing about this strategy is that it had missed this entire rally. It has not given any signal here, because I have used some other filters also. But you see, strategist tester overview, it makes a decent amount of money. It has 50 and this calculation is based on one lot only, and for 54% win probability, profit factor is very good, almost close to it is actually 2.5, and average profit per trade is as you can see more than 5,000, and it has only given 61 trades till now. So you see that we missed out this, one can say, in this strategy we have missed out a big rally. So what? So you don't have to, and that is this is a long only strategy. Here there is no option for, there is no signal for shorting. Just by playing Nifty long and making only limited trades, a handsome amount of profit can be made per lot basis, and even if we lose some of the moves, that is not a big deal. So therefore, this is now a ripe opportunity to just wait. Do not burn your money right now in futures and options. Just wait. If you want to take position, you can actually take position in the Nifty BEES benchmark. So that is Nippon, that is the Reliance Mutual Funds Nifty. I'll show you. NIF. It's a stock. It is an ETF, exchange traded fund. So Nippon India Nifty BES. So that is it. You will get a similar chart. Everything looks the same. Only thing is that per unit is 173. So 7,500 units of this stock is equivalent to one lot of future in its value. So the advantage of investing in Nifty BES is that your risk is 1:1. That is, whatever you are buying, accordingly there will be your gain and loss depending upon the percentage gain and loss in the Nifty. Whereas in futures, since you are compelled to buy 50 as a lot size, so your risk gets magnified. So although